Now, my next guest has already cut his growth estimate for the US because of the cost of crude. His name is Charlie Robertson. He's Global Chief Economist at Renaissance Capital. Thanks so much for coming in. Good to see you. So, could soaring oil prices be a game changer for the global economy?
Yeah, and something which banks take a very long time to respond to, because we're all sitting there hoping that it's not going to last, it'll come down quickly, and yet we just don't have that certainty, and not after Libya. So I think so. I think it's already we've cut our forecast from 3.5, because everything in the US has been pretty well great.
This is your forecast in the US?
For the US, we've now cut it down to 3.
What was it before?
3.5.
3.5. Okay.
But we're assuming that oil's 110 for the next couple of months, and then back down towards 90-ish for the second half. If anything kicks off in Saudi, we're going to have to slash those forecasts. And
that's the key right now, isn't it? It's not just about a revolt in Libya anymore. If things spread to Saudi Arabia, all bets are off the table. Exactly. How bad could it get?
It could get, well, we'll get the double dip that we worried about last year.
That's
the
a
concern.
Certainty, is it?
Well, we saw what happened in 2008. When oil prices were heading up, you saw the German IFO, German industrial confidence collapsing, Chinese PMI numbers heading into contractionary territory. That was well before Lehman's. We were going to have a recession anyway. Of course, the
You're
ECB,
seeing a repeat of 2008 now if it spreads to Saudi.
Well, that's what's already been happening for the last 2 months. So the ramp up in oil prices in the last 2 months is very similar to what we saw in early 2008. And the potential for it to get worse is obviously there. No one can be sure what's going to happen next. But already this uncertainty is keeping oil high, and that in itself is going to hurt the US consumer.
And actually, a lot of analysts are saying that even if the protests themselves in Saudi Arabia, because they've called for a day of rage this Friday, even if the protests themselves are not all that widespread or serious, a government crackdown could also disturb the price of oil.
Absolutely. Absolutely, and we've seen this disturbance obviously in a number of other places. So it's the Shia minority, well, majority in Bahrain, the Shia minority in eastern Saudi Arabia that's particularly concerning to the markets. And we just don't know what's going to happen. Really, global growth right now depends on what a few hundred young Saudi men do on Friday or the following Friday.
So you've already cut your growth forecast for the US, but I guess different regions, different countries will be affected in different ways. How will the US fare should oil prices continue rising? Should we continue seeing this volatility? How will it fare compared to other advanced economies?
They're all going to suffer, and we've cut our German forecast as well. I know Axel Weber this week is saying that rates should go up to 1.75. He now thinks that Germany will grow by 2.5. Well, he was late on that forecast. We were already saying 3. We've cut it to 2.5 based on where oil is today, and think it could get worse as well. So this is going to be a global problem if problems intensify in the Gulf.
Inflation from rising energy and food prices, commodity prices, more of a problem in Europe than the US, right?
Well, we'll see US Treasuries heading up, so we'll see a hit to the fixed income market, at least 50 basis points up in the next couple of months if oil continues to rise. Actually, in terms of just oil, the Americans so little tax on their fuel that they get hit more by rising fuel prices than the Europeans, where there's very high tax on the fuel. So the actual oil cost in Europe isn't such a big deal, but both will get hit. It'll be companies getting hit as well.
Great, thank you very much. Charles Robertson of Renaissance Capital.